Last year in September 2019, there was a company which launched an IPO. The IPO was priced at rupees 320. Guess what? That IPO got 110 times subscription. And on the day of listing, that share price jumped from rupees 320 to 626, giving more than 100% return on the first day of its listing. So those lucky folks who got the share allotment during IPO were sitting on a profit of more than 100% on the first day itself. And that was not the end. Within next 5 months, the share price jumped from 626 to 1900 plus. So even those who did not get the IPO allotment and invested after the listing were sitting on profit of more than 3 times. Do you know what is that company? That company is IRCTC. Hello everyone, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. After the kind of rally we have seen in IRCTC after its IPO listing, everyone is excited to know more about IRCTC. What is the reason that led to 6-time return in just 5 months for IRCTC? The share price jumped from 320 rupees to almost 1950 rupees. And from there, it is currently available at the level of 1400. So the question is whether it is worth investing in IRCTC. What is so special about IRCTC? So as usual, we will start our fundamental analysis by exploring more about the company and its management, its competitive strength and weakness, and its future growth prospect. And then we are going to do the financial analysis of the company. But before we proceed further, this is an in-depth analysis of IRCTC and you should only watch this video if you are a serious long-term investor and not looking for short-term trading tips. Started in 1999, IRCTC stands for Indian Railway Catering and Tourism Corporation. Many people think that IRCTC is a railway company. No, it is a Catering and Tourism Corporation and it is a subsidiary of Indian Railway. So basically IRCTC doesn't own the trains and the railway infrastructure. It only manages the catering, tourism and ticketing aspect of railways. As of today, IRCTC has got a market cap of more than 21,000 crore rupees. There are 4 major business segments of IRCTC. The first segment is internet ticketing. IRCTC is the only company authorized by Indian Railway to offer online ticket using their website and mobile application. Since 2002, there's a huge growth in online ticket booking. And IRCTC ticket booking has grown at a CAGR of 53.8% in the last 18 years, which is just phenomenal. Just to give you an idea, last year the average ticket booking on IRCTC stood at 8.25 lakh tickets per day. Next segment of IRCTC is its packaged drinking water. IRCTC has got its own brand called Rail Neer that supplies water to the trains and stations within the Indian Railway network. Since 2003, the packaged drinking segment of IRCTC has grown at a CAGR of 22.13%. Next business segment of IRCTC is its travel and tourism. IRCTC is one of the leading travel and tourism company in India and its services include domestic rail tour packages, holiday packages and luxury train such as Maharaja Express and Golden Chariot. IRCTC also provide domestic and international airline ticket booking and hotel booking facility. The fourth business segment of IRCTC is its catering business. IRCTC is the largest hospitality and catering company in India. Its services include mobile catering via pantry cars in various trains as well as train-side vending contract for passengers traveling in train without pantry. It also offers various value-added services to its passengers. For example, it has got various executive lounges, retiring rooms as well as budget hotels near major railway stations all over country. Next subsegment within catering is its static catering where it has opened various food plazas, food joints, refreshment rooms at its railway stations. Final subsegment is its e-catering business where passengers can actually book meals while traveling on train. If you look at the operating revenue breakup by segment for FY 1920, internet ticketing has a 27.24% share in total operating revenue. Packaged drinking water has a 9.76% share in total operating revenue. Travel and tourism market has 17.11% share in its operating revenue. Finally, the catering business has the biggest share in total operating revenue with 45.89% contribution in the revenues of IRCTC. Hence, looking at the overall business of the company, I would rate it 10 on 10. Before we discuss the competitive strength and weakness of IRCTC, let's first try to understand why it is important. Let's say you open a restaurant in your city, and let's imagine that it is the first restaurant in the city. What will happen? There is going to be a huge demand. But what if next month there is another restaurant in the city? Obviously, you are going to face competition from that restaurant. And what if within few months there are hundreds of restaurants in your city? It is obviously going to affect your revenue and profits. But what if you are the only person allowed to open restaurant in your city? And what if you are the only person allowed to open restaurant in entire country? You are going to be minting a lot of money. That's exactly what IRCTC is doing. IRCTC has got monopoly in the business it operates. IRCTC is the only company authorized to sell railway ticket online. IRCTC is the only company allowed to sell packaged drinking water within trains and the entire Indian Railway network. IRCTC is the only authorized entity to provide catering services in trains. So IRCTC enjoys the monopoly in the business as there is no competition to IRCTC. And that's what you call it a thick economic moat. But having said this, there are few risks associated with IRCTC and you should be aware of those risks. IRCTC has got its dependency on the policies from Railway Ministry. So if tomorrow the ministry make any changes in the policy, then it might impact the revenues of IRCTC. For example, IRCTC used to charge ₹20 per ticket on non-AC booking and ₹40 per ticket on AC booking. But in November 2016, the Ministry of Railway withdrawn those charges to promote digital payment. This resulted in a revenue loss of IRCTC in the tune of 2,088 crore rupees. However, this ticket booking charges has been again started from September 2019. Although the new rates have gone down from ₹20 to ₹15 on non-AC booking and ₹40 to ₹30 in AC booking. Next big risk is its competition risk. As of now, IRCTC enjoy monopoly in the business. But what if tomorrow the Indian government or Railway Ministry open up its market for private players? In that case, IRCTC would face strong competition and this might impact its revenue in the future. Hence, overall looking at the competitive strength and weakness of IRCTC, I would rate it 9 on 10. Now as an investor, you want to know whether IRCTC is going to give good returns in the future or not. And for that, we need to analyze the future growth prospect of the company. So let's get started. In the short term, the growth prospect of IRCTC looks bleak. And the major culprit here is COVID-19. Due to this pandemic, many people are avoiding traveling via trains. And it has badly impacted the revenues and profit of IRCTC in the first and second quarters of this year. But I am sure this is a temporary dent. Once the vaccine is out, everything would normalize. So now let us look at the long-term growth prospect of IRCTC. If you look at the e-booking industry in India, in the last few years, the online ticket booking has grown at a very fast rate. And the major reason is many people are traveling all over the country. So over the next 5 years, the online ticket booking is expected to grow at a CAGR of almost 16 to 17%. Factors such as rising internet penetration, affordable smartphone, low-cost data, as well as increase in usage of debit and credit card are going to fuel growth in the online ticket booking. If we talk about the packaged drinking segment in India, it is expected to grow at a rate of almost 20% CAGR for the next 5 years. Increasing awareness about the packaged drinking water for good health as well as rise in per capita income has fueled the growth in the bottled water in India. The market size of packaged drinking water in India is expected to grow from $160 billion in FY18 to almost $400 billion by FY23. The average daily requirement of packaged bottle in Indian Railway is almost 18 lakh bottles per day. And the production capacity of IRCTC is around 14 lakh bottles per day. Hence, IRCTC is planning to bridge this gap and meet the demand, and it has launched new water plants. The travel and tourism industry in India is also growing at a rapid rate. The foreign tourist in India has grown from 3 million in year 2003 to almost 11 million by 2018, and it is expected to grow to around 30 million by year 2028. If we talk about the catering business, the organized player in India has got almost 35% market share, and it is expected to grow at a CAGR of almost 18% for the next 5 years. To cater to this growing demand, IRCTC is planning to cover almost 100 plus sections on Indian Railway network with train-side vendors as well as many new food joints arrangements. Hence, looking at the future growth prospect, I would rate IRCTC 10 on 10. Now let's look at the financials of the company. If you look at the growth ratios, the revenues has grown from the level of 1059 crore by March 15 to level of 2275 crore by March 2020, and you can see that there has been a consistent growth in the revenues. If you look at the profits has grown from the level of 131 crore in March 2015 to level of 529 crore by March 2020, and again the profit has been growing at a consistent rate. So over the last 5 years, the revenues of IRCTC has grown at a CAGR of 17% and the profit has grown at a CAGR of 32%, which is simply fantastic. And hence, on growth ratios, I would rate IRCTC 10 on 10. If you look at the profitability ratio, the operating profit margin of IRCTC has consistently increased. You can see that in March 15 it was 14% and from there it has increased to the recent level of 31% by March 2020. If you look at the return on equity and return on capital employed, both are well above 20%. In fact, in March 2020, the return on equity was 39.83% and the return on capital employed, which is in red, was 56.63%. And it has been consistently well above 20% for last 5 years. Clearly, IRCTC is not just growing at a very fast rate, but it is also highly profitable. The return on equity and return on capital employed are well above 30%, which is simply fantastic. Hence, looking at the profitability, I would rate IRCTC 10 on 10. If you look at the leverage ratio, the debt to equity is consistently 0. It means there is no debt with IRCTC. Considering IRCTC has got no debt, I would rate it 10 on 10. If you look at the management efficiency ratio of IRCTC, you can see this red bar is the inventory turnover. This inventory turnover has reduced for IRCTC in the last couple of years. And if you look at the debtors day, it has been on the higher side. So on the management efficiency ratio, I would rate IRCTC 8 on 10. Now let us look at the valuations of IRCTC. If you look at the current price of IRCTC, it is trading at the level of 1378. And if you look at the lows and high, the low was 775 and the high was 1995. So it is trading somewhere in between the low and high. If you look at the overall price movement, you can see that in the last few years, since November, it has increased from the level of 779 to level of almost 1900, and then due to COVID it fell down, and then currently it is trading at the level of 1376. If you look at the price to earning ratio for 3 years, you can see that obviously the company has got its IPO around October 19. Hence, since then, company has maintained a median PE of 52 and it is currently trading at a PE of 65.8. The major reason for the increase in PE ratio is due to fall in the profitability in March and June quarter. You can see that the profit of IRCTC has fell down from 206 crore in December 19 to 151 crore in March 2020, and in June it was actually in loss. So company made a loss of 25 crore in June 2020 quarter. However, it looks like the situation is improving, and in September 2020 it made a profit of 33 crore. Hence, looking at the overall valuations of IRCTC, I think the PE ratio is slightly on the higher side and is slightly overpriced. As the COVID situation is not yet over, there is a potential risk in the loss of revenue and profit for IRCTC for the next few quarters. Hence, overall on the valuation, I would rate IRCTC 5 on 10. Having said this, IRCTC is a fundamentally super strong company with a bright future prospect. If you are a long-term investor, then you should consider having IRCTC in your portfolio. I am sure that in the future, as the situation improves, IRCTC profitability and revenue are going to grow at a very fast rate, and IRCTC has got all the characteristics of a multi-bagger stock. So in this video, we investigated the fundamentals of IRCTC. Do you think it is worth investing in IRCTC? Do let me know your thoughts in the comment box. Also let me know which company you want me to cover in the future.